Most people spend their entire lives working for money without ever realizing there's another option. Imagine waking up one day and knowing your money made more overnight than you did at your job that week. No lottery ticket, no scam, just a system built slowly over time. And the people who reach that point usually understand one important thing: trading and investing are not enemies. Together, they can become one of the most powerful combinations for building financial freedom. Now, before we continue, if you want a completely free, simple screener to find high-quality stocks to invest in, check the link in the description. It's one of the easiest ways to quickly find strong companies without spending hours researching. Here's the mistake most people make. They think trading alone will make them rich, so they jump into charts every day trying to double their money fast. Sometimes they win, but eventually emotions take over. One bad trade wipes out weeks of profits, and they start all over again. That's because trading by itself is not enough. Trading creates income. Investing creates wealth. Think about it like this. Trading is the engine. Investing is the vault. One helps you generate extra money today, while the other quietly grows your future in the background. The real magic happens when you combine both. Instead of spending every trading profit, you move part of it into investments. Broad index funds, strong companies, assets that can grow for years while you sleep. That's where compounding starts changing everything. Compounding is simple, but incredibly powerful. Your money earns returns, and then those returns start earning returns too. At first it feels slow, almost invisible, but over time, growth begins accelerating. Think of a snowball rolling downhill. In the beginning, it barely grows, but as it keeps moving, it gets bigger, faster, and faster. Investing works exactly the same way. Someone investing consistently for 20 years will usually outperform someone constantly chasing quick wins, because the market rewards patience more than excitement. Let's say someone invests $500 every month into a broad stock index fund, averaging around 8% annually. Over time, that small monthly investment could grow into hundreds of thousands of dollars, not because they were lucky, not because they predicted every market move perfectly, but because they stayed consistent. Now imagine adding trading profits into that investment account every month. Even an extra $200 or $300 consistently invested can massively increase the final result over time. But here's the important part. Successful traders are usually not the people taking huge risks every day. They focus on discipline, risk management, protecting their capital, because surviving long-term matters more than looking impressive online. The same is true for investing. Most people panic during market crashes and sell at the worst possible moment. Experienced investors understand that markets move in cycles. Prices fall, fear spreads, and eventually recovery comes. The people who stay calm during those moments are often rewarded the most later. And if you think you don't have enough money to start, remember this. Most wealthy investors didn't begin rich. They started with small, consistent habits. A few $100s invested regularly is far more powerful than waiting years for the perfect moment. Trading can help you increase cash flow. Investing helps you build freedom. Together, they create a system where your money slowly starts working harder than you do. So ask yourself this: do you want to spend your whole life working for money, or do you want to eventually reach the point where your money works for you? Start small. Stay patient, protect your capital, and let time do the heavy lifting. Also, don't forget to grab the free simple stock screener in the description to help you find high-quality stocks faster. If you enjoyed this video, subscribe to the channel, like the video, and comment below. Would you rather become a full-time trader or a long-term investor? And remember, financial freedom usually isn't built in one giant moment. It's built quietly through small, smart decisions repeated for years.